Great to check in with you here in terms of the market kind of repricing on the fly here in terms of equities. It's been part of the story all year. Valuations getting compressed in equities in reaction to what's happening with monetary policy and growth expectations. Just big picture, how does it look to you? Does the market seem to be roughly in tune with what the macro outlook reads at?
I'll give you a conditional response. I mean, this is a market that's been driven by inflation almost all through the year. For the first 6 months, markets had no idea what was coming. In July and August, the good news was the markets thought they'd arrived at a consensus. They thought the economy would slow down, but it'd be a soft landing. And then inflation would come down pretty quickly. This week has been a reminder that just because markets reach a consensus doesn't mean that that consensus is right or it cannot change. Because we still have no idea how deep and long this recession will be and how quickly inflation will come down. So I think we're in for these periods of uncertainty, and this week is a reminder that we're not quite done.
Now, you say that inflation has been clearly the beacon for where markets are going to go from here. So that would seem to be the huge swing factor in terms of deciding if the market's fairly valued, overvalued or not. We're not just going to necessarily take last month's CPI to do that calculation. Is there a way to handicap what the market is already pricing in terms of the future trend of inflation?
I think the market's pricing in about a 2 to 3% inflation coming in pretty quickly. I mean, that's what you see in the T-bond rate. To me, there is no better indicator of the long-term expectation of inflation than the T-bond rate. So right now, the market is pretty upbeat about what will happen to inflation. And as we saw in the 1970s, sometimes markets don't quite get how difficult it is to get inflation under control. And that was, I think, Jerome Powell's message today, which is just because you have a month of good inflation doesn't mean we've got this monster under control. And I think that reminder is needed because I think markets are getting a little ahead of themselves in terms of having the inflation bogeyman back in the closet.
Yeah, and I guess in terms of the internal drivers of the overall stock market valuation, which, into the end of 2021, dramatically concentrated in the very large growth stocks where you had embedded, expectations of great growth for years to come. They've come in a fair bit. Is there a way to assess whether, they've rationalized at all by now?
No, I'll take the tech sector. I mean, I think we make a mistake of classifying it as one sector, but there's old tech and new tech. If you look at old tech, I don't think it was ever as overvalued as people claimed it was. New tech, the Zooms, the Pelotons, the Shopifys, clearly got way ahead of themselves. And I think old tech will behave much better than new tech. And you're seeing this in the market. I think they will hold their value better. And if you look at a company like Apple, I think it's the greatest cash machine in history. And if you're concerned about holding on to value, I'd rather hold Apple than I would Coca-Cola.